What's up, Nashville? I am Beau Beach. Welcome back to the What You Need to Know podcast. I am going to quickly update you on 10 of the most relevant, informative, and interesting stories of the past few weeks. That's what we do here on the podcast. I know everyone is very busy. I know everyone's attention spans are very short. So why don't we get into the first story? An update on what's going on with interest rates. So the number one thing that's going to move the real estate market, both on the residential side or on the commercial side, which is the market that we care about, right, is interest rates, right? We haven't had any movement yet this year. We came into the year expecting up to two uh, decreases in interest rates. We assumed that the new Fed chair would perhaps accelerate those cuts. But after his first meeting, they held rates flat. I don't think that's the most interesting part of the story. I think how the Fed is going to operate going forward is really the headline. The new Fed chair is working to change norms quickly, and I want to explain that to you. Jerome Too Late Powell elevated press conferences to a post-meeting staple, one after every meeting. He was in that role for 8 long years, and his transparency was abnormal. But he was in that role for so long, I think we've all kind of forgotten what the Fed chair really acted like before him. And now we've got someone new in that seat, and he is going to be changing the process. Even if he isn't changing rates right away, he's certainly changing the process. Kevin Warsh is the new guy. He's been openly skeptical. At his Senate confirmation hearing, he declined to commit to that same cadence, raising the prospect of reverting to 4 press conferences per year, which was the norm before Too Late Powell. His core criticism is that too much Fed communication creates noise, anchors markets unnecessarily to near-term signals, and places the central bank at the center of decisions it shouldn't be driving. He doesn't want to give forward guidance, whereas Powell used forward guidance as a form of monetary policy in itself. His stated preference for messier meetings where committee members debate openly rather than a signal rather than signal a prepackaged consensus signals a less predictable Fed. The era of knowing what the Fed is going to do at any given meeting has now ended. The market entered 2026 expecting 2 quarter point cuts by December. Two now seems like a massive stretch. Warsh came into the role promising a reform-oriented Federal Reserve, and the institutional changes he has outlined are arguably more consequential than any single rate decision. Communications overhaul, abandon or dramatically scale back forward guidance. Inflation targeting reform. Warsh seemed open to redefining normal inflation as anything between 2 and 3%. Balance sheet reduction. Shrink the Fed's $6 trillion balance sheet and exit mortgage-backed securities holdings entirely, pulling the Fed out of the housing market. So while he didn't adjust interest rates, he did dramatically change how the Fed is going to communicate and what it thinks its job is going forward. Mandate refocus, pull the Fed back from climate policy and other areas he views as outside his statutory dual mandate, which is price stability plus maximum employment. A smaller, quieter, and more disciplined Fed, one that seems likely to generate more short-term market volatility as investors lose the constant flow of guidance they've grown accustomed to. Our base case is still 1 cut this year, probably not happening until the last month of 2026 around Christmas. So 1 quarter point rate cut is all we expect for the remainder of the year after coming into the year expecting 2. Bottom line for commercial real estate owners. Plan around the idea that any near-term rate relief is likely to come from the market itself rather than Fed action. So we're kind of entering a new era in how much uh, control the Fed has over the greater economy, even more so how much control they have over manipulating interest rates, right? So they have a number of tools available to them, and some of those tools they will no longer use. So it's going to be interesting to follow. It sounds like we're only going to get 4 press conferences per year. So in between each of those press conferences, we should expect a little bit more volatility. But base case is 1/4 point cut by the end of the year, which would be nice, but probably isn't going to move the market too much. Next, Nashville's newest social club for wine enthusiasts. And I thought this story was interesting in that it just doesn't make any sense to me to have a business located in the Gulch, right? A very high price location where the concept itself is a members only club. We're going to sell you food and we're going to sell you drinks, but only to members, right? So for me, it's like, well, what is my incentive to be a member? Do you really have such unbelievable food and drinks that I'm going to pay a monthly fee just to get access to them? You know, there are many country clubs, right? There are many private athletic clubs that also have a food service where you've got access to, you've got a minimum you need to spend, et cetera, et cetera. And I understand that because the food and beverage are not the main thing, right? The main thing is the golf, the main thing is the sports club. And it's cool to have kind of a hangout spot after you've done those core things, right? The golf and the sports. To skip straight through to just being a member of what's essentially a restaurant so you can buy their food and drink. I just don't understand the concept. I must not be the guy that's interested in such things. It seems to me that people are very, very busy, and to get to the Gulch, not the easiest thing if you're coming from outside the downtown core. So I'm going to join a club located in the Gulch that I'm going to make myself get there once a week so I can spend money on food and drink. It just doesn't seem like a wise business model to me. But nevertheless, here's the story. The Perlant, Perlant, Perlant will open at 507 12th Avenue South in fall of next year, marking the brand's first expansion outside of Atlanta. The space was previously home to Gertie's Whiskey Bar and the 404 Kitchen, which closed earlier this year. So understanding that these first 2 restaurants have failed in that location kind of tells you the degree of difficulty we're working with here. You know, very, very high overhead location, difficult location to get to. I'm not sure exactly what the parking situation looks like here, but probably less convenient than people would like. It's just not a location where I can see people routinely going every week. Uh, but nevertheless, maybe that's true because, you're not really pulling from the tourism, right? Most downtown establishments survive on tourism, but because this is a private location, a private club, tourists are not allowed, right? It's got a full bar, coffee program, non-alcoholic options, and a seasonally rotated food menu. Since opening, the Atlanta location has grown to over 500 members. Membership options include the flagship, an offering for members under 30, as well as a corporate membership. Costs to join were not disclosed. The Gulch is becoming a major wine destination. In October, a London-founded wine bar called Vagabond will open at 1000 Division Street, and nearby in Cummins Station, another members-only club called Lodge 2A is underway. So I very much understand the membership model, right? The best businesses have a recurring revenue component, and that's what you're getting with the membership model. Uh, you know, I don't disagree with the idea of trying to have a recurring revenue component to any business, uh, but to pay to become a private member of a restaurant, boy, I would be scared to death. And they're not opening for another year, which means they're going to be spending a lot of money outfitting that space. There's going to be a ton of money going out before any money starts coming in. And then you've got a very high rent location, arguably a difficult to get to and park at location. So I wish them well. Maybe there are just single folks that don't have a whole lot to do, that've got extra money in their pocket and want to make a trip to the Gulch every week. But I am not him. If they exist, I hope they do well. 500 members in Atlanta is pretty impressive. It'd be interesting to know, what kind of location that is. Is that a downtown core location, or is that more of a suburban location where people can get to from their houses easier, park easier? It's not as big of a to do. But we're moving a little bit slow today, so I'm going to pick up the pace. This is a very interesting story. If there was any project going on in and around Nashville that I could snap my fingers and magically make it work, this is the one I'd go with. Franklin Farmland, to be developed in partnership with Nashville sports franchises. This is going to be, hopefully, this isn't a done deal. This is something that's still in the planning stages. Located at the equestrian show space at Brownland Farm, which is effectively at the corner of Mac Hatcher Road and Hillsborough Road, near the Franklin Recreation Complex, very near the new bridge that folks that live in West Haven are so happy to have. So this is a horse farm that is being pitched, at least, to become a sports-focused mixed-use development to include the Nashville Predators, Tennessee Titans, and Nashville soccer clubs. It is going to be called the Banks at Brownland, which will include a hockey facility, football, soccer, and lacrosse fields, and a golf training and practice facility, in addition to restaurant and retail space, medical offices, and a grocery store. 2027 construction start and a 2029 completion date are penciled in at this time. Total cost for the complete project is estimated to be $300 million for everything except the hockey facility, which will be funded by Franklin and Williamson County if the government entities decide to move forward with that component of the project. And I would tell you, this is no small endeavor. I recently put in a a turf training field, right? Artificial turf soccer field, 9,000 square feet, which sounds like a lot, but it's really not compared to the size of a traditional soccer field, which is much bigger than even a football field, right? And if you pencil in, I don't know, $10 a square foot and multiply that times the amount of square feet in a soccer field, we are talking about real money being spent on these fields. So whether the hockey happens or not, just getting uh, turf fields, multi-use turf fields in this location is going to be a very, very costly endeavor, and I wish them the best. Williamson County, for the high quality living that we have, is very, very underbuilt in terms of sports facilities. Very much in need some higher class sports facilities as we travel for sports throughout the Midwest, primarily just because that's the conference my children play in. I see in other markets that don't have as much going for them, don't have as much income as we do in Williamson County. They have much, much better facilities than we do, and we are falling behind in that race. So this would scratch an itch that people have in Williamson County. Let me give you a few more bullet points on what's expected here. 100,000 square foot hockey facility with 2 sheets of ice managed by the Preds. 6 fields dedicated to football in partnership with the Tennessee Titans. 6 fields of both grass and turf dedicated to soccer in collaboration with Nashville Soccer Club. more than 60-acre golf facility with an AI-driven golf improvement platform, 400-yard driving range with nearly 200 hitting bays, short game practice area, putting green, and 9-hole short course. Grace Work Ministries future building for community wraparound services, and 400,000 square feet of retail, restaurant, grocery, fitness, wellness, and medical office space. This would be a totally awesome project. I very much hope this gets done on this 233-acre property. Huge property, pretty good location, really. I think the location makes sense. They've got a lot of floodplain there, which limits what they can do with the 233 acres. So I think this is a perfect solution to the problem of really inadequate sports facilities in Williamson County. And, I'm being selfish here. I live in Williamson County. I have young athletes. I would love to see that come online while they're still kids and can use it. Let's keep moving. Starbucks lease strains Class A office space. Nashville has less than 300,000 square feet of office space under construction. Starbucks swooped in to take over an entire downtown building. They signed a 250,000 square foot lease in downtown's Peabody Union. If you look at all the Class A that's been built since 2020, only 19% of that space is still available. With just a handful of new office buildings under construction in Wedgwood, Houston, there's few Class A office buildings that offer a large amount of space that these larger tenants are looking for. So what they're saying is we're running out of big blocks of office space in Nashville. We're going to build a 400,000 square foot building that would be 36 or 42 months. That's a long runway. So the idea here is, imagine you had another Starbucks that comes to town and says, hey, we need a block of 400,000 square feet. We'd be 36 or 42 months away from actually being able to provide them with that because we don't have any of those buildings currently in the pipeline. So the argument being made here is that Nashville will soon have a shortage of large office spaces to offer these big businesses that want to move to town, that want to bring jobs with them, that want to escape these blue states and blue cities. They want to come to Nashville. We should have some options to park them like we did Nashville. And despite the increase in demand, office space continues to be one of the hardest types of developments to fund. So this comes down to really the same problem we're having across all different asset types in terms of ground up new construction. They're very, very difficult to finance right now. So we've got guys, if you've listened to the podcast in previous weeks, we've got guys that paid tens of millions of dollars for dirt to build on in 21 and 22 and still haven't done a darn thing with it because the market has really dried up from a capital perspective. Capital meaning debt and equity financing. It's hard to get the debt. It's hard to bring on the equity partners. And that's why most of that high priced land still sits there today. And it's hard to imagine how that's going to correct itself without a change in interest rates like we discussed earlier in the show. So I'm very hopeful it works itself out. But the argument being made in that article is we need big office buildings that are ready for big users, and we don't have them right now except for a little bit of space in Wedgwood, Houston. Two quick ones for you here. The Lucky Bastard Saloon sells for $46 million. Big ones. A lower Broadway honky tonk that's been sitting on the market for years is finally sold. 408 Broadway first hit the market more than 2 years ago with an asking price of $66 million. So they came off their price $20 million to get the deal done. The seller was Pennsylvania-based DeVille Corp., which purchased the building in 2005 for just $2.35 million. It is unclear if Lucky Bastard Saloon will remain open under new ownership. So the story there is, just because you're on Broadway doesn't mean you can ask any price you want, and doesn't mean it's going to sell quickly, right? They wasted 2 years on the market before coming off their price. $20 million. But don't feel sorry for them. They made an extreme amount of money in that transaction. Nashville Yards eyes a 35-story tower. The tower will rank as the fifth largest downtown Nashville office building. Oh, maybe Nashville Yards is going to be the one that steps in and provides us with a big office building that we could park a big relocating user. The tower would be the fifth office building in Nashville Yards, joining the Pinnacle Tower, CAA office building, and Amazon's two towers. The new building, if approved, would occupy 620,000 square feet of office space. As the office pipeline begins to dry up with less than 300,000 square feet of space under construction, plans for the new tower include a 16,000 square foot retail space, a 150-person conference room, and a boardroom. Other amenities include a 2,500 square foot fitness center and an outdoor terrace space. So the folks that are doing the Nashville Yards development are very, very smart, capable people. Southwest Value Partners, they've done an incredible job with that project. They are seeing what we were just talking about, that we are quickly running out of office space, and now is the time to add 620,000 square feet to the skyline. I bet this gets done. It's going to take some time. It's going to take probably 3 or 4 years. But this would be a wise thing, and the timing makes perfect sense for Nashville Yards. We're rooting them on as well. What it looks like to reposition an already nice office building. So the challenge that folks have in the downtown core is there's been a real rush to Class A space, right? So if you were Class A 15 years ago, you aren't Class A today. The Class A space is the stuff that's coming out of the ground, that's brand new, that's full of amenities, that's full of everything that the current tenants are demanding. So what's happening is, as those leases roll over from that once Class A space, those tenants are opting to jump ship and go into the new Class A spaces. So what are you doing if you used to be a Class A building, but now everything's been a little bit more dated? The amenities that tenants require have changed. The expectations have just shifted a little bit. Well, that's exactly what the folks at Highwoods had to decide about their project called Symphony Place. Raleigh-based Highwoods Properties recently unveiled its extensive overhaul of Symphony Place, featuring a new amenity level, upgraded lobby, and more. At one point, the tower was 100% leased to big office tenants. Several of its largest tenants left for newer developments in recent years, but Highwoods took it as an opportunity to completely rebrand the downtown tower. They had fallen behind in the amenities race, as they were 100% leased and did not have the space to even add amenities if they wanted to. Quote, "We have been able to take advantage of a leasing reset to upgrade all the public areas of the building and add an elevated set of amenities not offered in any other Nashville building. As part of the overhaul, Highwoods took out a large chunk of leasable space and transformed the 7th floor into an amenity level called the Cumberland Club. That is a tough pill to swallow, let me tell you. You take out leasable space, income generating leasable space, and replace it with a very expensive amenity level that is not income generating. I'm telling you, that is a very tough pill to swallow, and most guys just would refuse to do it. The numbers involved would be staggering. The loss of value from giving up that leasable space, plus the upfront capital expense to get in there and create the space. We're talking multiple millions of dollars that were sacrificed by taking leasable space and turning it into an amenity level, right? They're adding a bar area, a golf simulator, a pool table, a fitness center, saunas, and a conferencing center. One of the most eye-catching parts of the overhaul is, quote unquote, the green, a 1-acre outdoor space with walking trails, a multi-sport court, a yoga lawn, and an outdoor grilling area. Last year, Holland and Knight signed a lease for 7 floors, or around 145,000 square feet in the building. 177,000 square feet of space in the 520,000 square foot building is now available, with an additional 29,000 square feet becoming available in January. So these poor guys did a 145,000 square foot lease and still have 177,000 left to go, and have another 29,000 coming back uh, in January. So, you know, the hand of cards that Highwoods was dealt on this Symphony Place tower, very, very difficult. They're spinning this as a leasing reset, right? But really what's happened is they were in a very, very tough spot. They must have very strong uh, banking relationships that would allow them to finance something like this, because this is generally a downward spiral that the owner, the landlord, cannot pull himself out of. But it seems to me that Highwoods is going to make it through one way or another. But very, very difficult transition. A very, very nice building that they've had to scrap leasable space, invest a huge amount into an amenity level, and still have almost 200,000 square feet to lease. When you've got 200,000 square feet to lease, let me tell you something. There is no way you have positive cash flow on that property. So they are losing money every month. They are funding the losses at the same time funding an amenity level, which is a very difficult thing to do. So let's keep moving. We've got a few short ones for you here. We got 3 left to go, and then we're going to wrap up today's podcast. Nashville Underground shutters. The downtown building is now for sale. Celebrity partners exited the ownership of the property. Nashville Underground, founded by brothers Gavin DeGraw, a popular singer, and Joey DeGraw in 2018, closed after 8 years. This is considered a historic 7-story building. The DeGraw brothers purchased the 55,000 square foot building in 2023 for a whopping $30 million. It was listed for sale in early April 2025. In September, the building hit the market once again, this time with an asking price of $79 million. So again, another Broadway property that's been on the market for over a year. And while the asking price was private for most of the marketing period, they're now asking a publicly available $79 million, which I'm sure is uh, a lower price than they were targeting a year ago. So the interest in Broadway, or perhaps even just the ability to finance purchases at those price points, has shifted somewhat. But let's keep in mind, these guys 3 years ago paid $30 million and are exiting at a price around $79 million. So once again, let's not feel sorry for them. Let's wish them well. Let's hope that Broadway rebounds and we don't have these properties sitting on the market so long, because demand is so high that they figure out a way to get these deals done. The Boring Company, right? The Earth Tunnel Boring Company from Elon Musk buys a West End Avenue building. Elon Musk's owned company paid $2.4 million for a 3-story commercial building located at 3301 West End Ave. The property, only 0.3 acres, is located about 2 blocks east of West End Avenue and Murphy Road intersection near Interstate 440 and a potential Boring Company tunnel line terminus point. The just acquired property sits within a tunnel route along West End Avenue. This would start as far west as 440 and then head east on West End Avenue. So this is the proposed route that would head that direction, right? The route would start as far west as 440 and then head east on West End Avenue, go past Centennial Park, go past Vanderbilt Milltown, merge into Broadway, and then go down to the Riverfront Park. Boring Company could have a minimum of 20 stations in this city one day, which would be very cool. To carry a cost between $240 million and $300 million, which the Boring Company is paying itself, Music City Loop is expected to open in 2027. So Music City Loop uh, opens next year. Ultimately, there could be 20 different stations in the city where you can actually get in the loop, right? You can get in loop and out of the loop. Unless they've got a station there, you aren't getting in and out. So 20 stations with the first stations opening next year could be very cool. I don't know a whole lot about the Boring Company loops. I think it's more of a taxi driven service whereby you pay someone to drive you through the loop. Uh, I don't think you can take your own cars through. But if someone is trying to taxi from one side of town to the other, I'm sure the obvious decision is to take a Tesla through the Boring Tunnel. Lastly, a 300-acre mixed-use development in Franklin is now planned. Boyle Investment Company paid $18 million for 300 acres on Hillview Lane in Franklin, where the firm is planning the Harlan mixed-use development. If you're trying to place where the heck this is, right? If you're on Mac Hatcher Road and you keep going west past the new ML Rose, right? There's a Panera over there. There's a Target over there. You're on Mac Hatcher. You keep going west past the new ML Rose, and that's where this new mixed-use development is planned. Plans for the Harlan development have been more than a year in the making, which is not uncommon. They are planning to bring homes, a hotel, and a retail space near downtown Franklin. 250 homes, an 80-key hotel, and around 32,000 square feet of commercial space. 210 acres will be set aside for open space with a network of trails winding through the project. Anytime you hear of a big development that's keeping big open green space, you can pretty much assume that is unusable floodplain, right? It's cost prohibitive to change floodplain to not floodplain, right? And also it's an uphill battle within the municipality to get that approved. So most of these guys, they just take the floodplain, they set it aside and they don't use it, and they call it open green space and they call it trail systems. I'm sure that's what's happening here. Boyle envisions a mix of different housing types ranging from high-end homes to workforce housing. A central village green will anchor the development, featuring several mixed-use buildings, such as a small multifamily units above ground floor shops or cafes. So, some very exciting stuff going on in my hometown of Franklin, Tennessee. Maybe I'm a little biased towards those stories coming out of Franklin and Williamson County. I don't know. What are you going to do? I guess you'll have to sue me because that's what interests me. And I don't know what interests others except for, to find the things that interest me and share them with you. So that's what I've tried to do on all of the episodes of this podcast. I hope you've taken some value, maybe a little bit of entertainment from today's show. I want to just close with, I am Beau Beach. I am a commercial real estate broker. I specialize in listing and selling commercial properties in Nashville in the Southeast. I'm unique in that I only work with sellers. So we're laser focused on sellers and getting the job done for our clients, getting them the highest price the market will pay, making that process as efficient and as enjoyable as absolutely possible. So if you're a commercial property owner who's considering selling, I'd like to think we're the best in the business. Please reach out and I will do my best to guide you through the decision-making process. Thanks so much, and we'll talk to you all again real soon.